But the other stock that we're looking at this morning is Sanghvi Movers. Now, if you haven't tracked it, I mean, of course, it's a well-tracked, well-owned stock. But if you haven't tracked it, it makes manufactures cranes. And there is a lot of opportunity in the wind energy space now. A lot of projects announced that will be announced by the government. And of course, to execute these projects, you need cranes. So Sanghvi Movers, in the interaction that we had with them, said they are seeing a lot of traction in the wind energy space. The National Institute of Wind Energy has announced a potential of 25 gigawatts. And that could mean a lot of work in the wind energy space, building of infrastructure, substations, grid infra, acquiring land, developing sites. And all of this will need cranes. So the company said that their exposure to the wind industry will increase going ahead. Their yields will improve to 2% in FY24. And this will help them improve their operational efficiencies as well. Now, they already had a capex of 265 crores that was announced earlier, and now they will do an additional incremental 100 to 125 crore capex, but they'll continue to be debt free. So effectively the company is already debt free, about 150 crores of debt, and they will continue that. They also talk about how all of their capex will be funded through long-term debt financing. But I want to put it on board that the stock has seen a big run-up. If you look at it, it's already at a 52-week high. It's more than doubled in the last 12 months, and it has gained 43% in 2023. Nevertheless, this is a stock that the street likes. So let's listen in to what Rishi Sanghvi had to say earlier when we spoke to him.
There is a lot of traction in the wind industry, and capacity addition in the country is going to double in this financial year. So we're going to see anywhere between 4.5 to 5 gigawatts of capacity addition in the wind sector. We expect yields to be around 2%. What we have done is improved our operating levers. So our EBITDA is going up. And that is really what has resulted in us declaring a historic profit last year. Our capex plan for this year is at 264 crores. And this has been approved by the board. And as you rightly mentioned, 200 crores has already been brought online. This capex will start adding revenues in the last 3 quarters of the financial year. All our capex is backed by long-term orders. And the management may consider increasing the capex by another 100 to 125 crores, subject to board approval and the demand from the market. We are an asset-heavy company, and capex is required to fund incremental growth. So as you mentioned, yes, we have brought down the debt to 0.19. And this is effectively, we are a debt-free company.